Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's May 20th. This will be our chart lesson for the day. And I had a little snafu this morning. Um, I came in and my computer, I have my computer set up to do updates automatically on Sundays because I know that's generally when I'm not going to be here at the computer, and it usually goes off without a hitch. But I came in this morning and there was an update going on, and I thought it was kind of strange that there would still be one going on that long. But what it was, somehow it was just stuck in an endless loop, and it just kept restarting and saying it was updating and restarting, and do that every 10 minutes. So needless to say, I had some computer problems. It took me most of the morning to sort those out and get things rolling properly again. So um, I lost another trading day today. It just seems like lately I'm losing a couple of trading days a week, which is not the end of the world. But I was a little late. Main reason I tell you this is not because I missed the trading day, but because just to let you know why there was, if you was, several of you had emailed me this morning looking for the mid-morning chart, and it wasn't that I didn't hit the publish button twice this time. It's just I couldn't. My computer was down and I couldn't get to everything. So anyway, I got that rolling. Everything seems to be working properly now. And so let's hope I don't have that issue again. I think it's probably about time for an upgrade. You don't need anything special. People ask me that a lot. So just since we're on the subject, you don't need a special computer and bank of computer screens and all that. I do have two screens. I used to have three. I'm down to two now. But generally, what I do is, I keep my email on one of them and I keep my chart on the other. And it's not smart to be reading emails and working at the same time, but I still watch the chart after I'm trading, and I do my work on the main screen, and then I'll have my chart going on the screen next to it, so I can kind of watch the chart all day long, even when I'm not trading. And so that's kind of how I do it. And you don't need any super fast computer. I've probably had this computer 6, 7 years, so I can't even remember. It's a Hewlett Packard. I can't even remember what type processor it has in it, or how big of a drive it even has in it. But I think I'm about ready to the time I'm ready to upgrade. And but people ask me that all the time, and you don't need to spend a lot of money on. You just need one nice computer screen, and I recommend the wide angle screens because you can see more of the chart. Your charts, you can put more chart on the screen. You don't really need one of the big tall screens. You just need one of the wider ones. So the wide angle screens work great. I recommend those. I tend to like that. And so you really only need one screen with your trading chart and a computer that's relatively new and relatively fast. And like I said, mine's probably 5 or 6 years old. I'm not even sure. I can't remember when I got it, but it's at least 5 or 6 years old. And and I never have any charting problems basically. So it runs everything perfectly. And I do recommend that you probably don't use your main trading computer for playing games or doing anything, downloading anything and downloading a whole lot of stuff because you never know when you're going to get a virus. I'm very careful. I usually only read email and trade on this, so I don't do a lot of downloading and uploading of files and things like that. So some of you probably, you know, more up to date on that stuff than I would probably even be. So you probably already know a lot of that. But I get those questions a lot, so I thought while I had it on my mind, I would answer it. But let's talk about the trades. In the end, this was really kind of a range day. The overnight we traded down pretty strongly, relatively strongly. You can see that's a relatively strong trend down. And then the rest of the day we just kind of we chopped up, chopped back down, and then into the close we were kind of headed back up. And you can see the supports down here around 28.34 or so, and the resistance was up here around 28.55, 56 area, somewhere in there. And so it was mostly just kind of side. I mean, this is a decent uptrend, pretty weak downtrend. You can see how flat that EMA is, and you can see how we're swinging back and forth above and below. And generally, you can trade that both ways. But we really just went into a really tight and flat range late in the afternoon. You can see that right there. We kind of dropped below finally after lunch and traded down a little more. So this channel was definitely valid, but it's a lot of sideways stuff here, and we had a little break and then a little bit of movement down, and then we reversed. So I'd really classify this more as a range day. But let's back out a little bit, make this a little bit bigger, and we'll talk about the trades. Not a lot of trades today. There just wasn't a whole lot of movement today. So, but anyway, first trade I saw, 7 o'clock came right in here, and this was right at 7 o'clock. And we didn't break higher here, but this is basically, notice that low, first entry, and then you got a higher low. So when it broke lower there, that's a second entry. What you might do is just, when this bar formed, being that bearish, you might drop a sell stop right there and let it go. I mean, you could argue for this to be green almost. It's not a perfect setup, but it is a second entry, and the reason I kind of like it is you notice you got this trend line here coming down, and that's the first break. And so you're probably, and that's pretty strong, a couple of legs down, so you're probably going to test that low, and you got a little room there. So for that reason, I like that trade. But again, you could argue for that to be green. We actually make a second leg down here, and then we make that little jog lower that fools everybody, and then we reversed. And but notice this trend line, you get a break, and you got two pretty much measured legs down. I gave this one a green one, and here's the only reason. I'm not crazy about it because it's so, you're basically going short right into the lows. I'm not crazy about it. But here's the reason I marked it is that you try to go higher once, you try to go higher twice, and it's a second entry short. It's not a very good signal bar either. It's close to the lows, but there's some reasons to, you know, kind of like that. It's probably going to be a trap. It may trap some people. And you can see it shot on down pretty quickly and then reverse. So it's not a very good setup. And I did mark it because I know some people will ask me about it, and you could argue for it to be green. I'd probably skip it, but anyway, I wanted to talk about it because there were some reasons to like it. And then of course we bounce, and where do you figure we're probably headed? Back to the trend line. We did have a break up here early on this bigger trend line here. But you'll see that a lot of time in the overnight, and then if that trend continues to hold during the after the regular session opening, that trend line will usually still continue to be in play. But we do get a close outside here. It's not a super strong close outside, but it is one. And notice you're working up, you get a break, and you get a couple of moves up, and really you made that high right there. You tested it once, and then you tried to go lower. You came back and tested it twice. So there's a double test there. It's a real small bar, so pretty low risk entry. A lower high, it's a double top. You know, double top is basically a lower high anyway. And so I like that trade. I think it was worth risking. This is a double bottom here, so that's a first entry, second entry. It's a second entry short. Like I said, a double test. It's right at a key entry point. A lot of reasons to like that trade. So I marked that trade, and that's a nice little entry there. You didn't really get a second chance down here till way down here, and you don't want to enter down there because now you've had a close outside, even though it's relatively, it's not. I mean, that's not a super convincing close. This one actually closes outside barely, and then this one closes outside and it turns down. And there's really kind of two swings. I'd call that all one swing, really. But you're going to want a good setup here, and you don't really get one. Notice how you're just going sideways, a lot of congestion. It just keeps working up, and you actually get another attempt to go lower, but you got a trend line working up, and that's just a first entry. So wait for a second leg, and now you get a close outside, a second leg up, and a relatively bearish bar way away from the EMA. And so I like that one. That's probably your best setup so far this morning. And you actually run two legs down, and you start to get a little congestion there. You get a higher low here, but not a very good signal bar. And then you get a second entry long right here. I kind of like this setup, but the reason I wouldn't mark it is because I wouldn't make it blue is because look at all those dojis across there, and you know it's just congestion. But so you're better off to wait and see if you get another failure lower and a breakout pullback or whatever, and you actually get that right here. We actually break out, pull back, test it, and you tried to go lower 3 different times there. It actually makes a little dip there, a little. It's actually a tick lower, so it's a failed second entry short as well. And so I like that trade. It's good for a scalp. Still, the market goes nowhere. We just start going sideways again. You got another second entry long right here, and this is basically another little double bottom. So first entry, second entry, but you got to be careful on these second entries and second entry shorts and failed second entries when you're going sideways like this. But there's still a little upward bias, and you can tell we're still making higher lows here each time. You got a low, higher low, higher low, higher low, and this one's still higher, this one's still higher, and these are higher highs. So on the second entry with a failed second entry short, as long as you got enough room here, I actually would have had this down here at that point. I didn't move it up there till those closes came up there, so it's real close having enough room. So that would be the only other issue with that trade, but that's why I marked it green as well. It's just not a perfect setup, but anyway, it actually pulls back again here and makes another little dip lower, but that bar is so big, and it's really, it makes a little 2-bar matching high there, and it's right into these highs, so it's suspect as well. But finally we break out, and look at that nice bullish bar. It opens on the very low, closes on the high, and you would expect we're probably headed up here, so I like that trade. Breakout, pull back long, and off it goes. And where does it turn down? Right off that upper line. It was really a little confusion where it was, but when it matched this one, that's where I put it, and you can see that kind of meets the midline there. I think it fits well, so that's how I ended up looking at it. But notice you make that high, first entry long, second entry long, it fails, a big bearish bar. You're still a good bit away from the EMA. You ought to be at least coming back to the EMA in the midline here. It is an uptrend, but it wouldn't surprise me if this uptrend reverses because we had such a big move down, and this is not a real strong correction. So it looks more like a correction than a trend to me with all this sideways stuff. Doesn't mean that it doesn't turn out to be a trend, but it you know, when you get that failure and you're a good bit away from the EMA when you've been above and below it most all day, or I shouldn't say all day, but since the opening, basically, we've been swinging back and forth above and below it, really. And so I like that one, just at least to come back to the midline and the EMA, but and maybe come all the way back to this trend line, and it does. It comes all the way back down. You don't really get a setup here to take the bounce. There's a higher low here, but it's an inside bar on a doji. It didn't break lower. I think you have to wait, and it's close to the midline, and of course it trades up to the midline and turns straight down, but you don't really get a chance to go short either. But I'd look at all this as one leg. So when we did start down, you'd want to look for a possible measured leg down like so. You can see we went a little further than that before we bounced. But that's what I would have been looking for a minimum target if we turn back down. If you had an entry here, you could enter, but there's just not one on my chart. And there's, you know, I'm guessing your chart could be slightly different, but it shouldn't be so much different that you're probably going to have an entry there. And then you just had to be patient in here because you would think we're going to try to retest this high. We haven't filled the gap on the gap's way up here, so we still got a little bit to fill that gap. So there's just some more reasons, you know, it's just really unclear here. Are we going to make another leg down? Are we just going to correct a little bit and go higher? What's going on here? So it's not real clear. And you know, when you're not sure what's going on and you're not getting great setups, you just got to sit tight. And so you really just have to sit tight, at least on my chart. It's very unclear what's going on, and you can see prices just swinging back and forth above and below the EMA, and they're not really going anywhere. And you're not really getting any good setups. This was so tempting right here, but you got a trend line working up there, and you're above the EMA, and as bearish as that is, it could bounce right there. And you see it tried to bounce twice. It ended up dropping on down. but it turns and goes right back up, and now you get two-legged correction. So you got a two-legged correction, which is generally going to be the center of the uh, pattern. So I would measure that, and from here I'd look for a possible measured leg down, which puts you back down in here. We ended up going much lower than that, but that would be my first target. And then of course I would have measured these two legs. Oops. Once we started going lower, and then I would look for another measured leg, and you can see we bounced about that level before we made that last little push down. But yeah, there's not much going on in here. We finally got this trend working lower, and you still got some room here. Notice that you come back first entry, and then you really kind of go sideways and break lower, and then get a failed second entry long. But it's right off that trend line, key entry point, and you got enough room to get out before here, and you definitely have enough room before the lows here. So I kind of like that one. I figure you're going to probably trap some people right there, and this does, you can tell we trapped people by how quickly that bar drops down. All these longs had to exit, and it moves on down, and then we're just kind of in the lower half of this trading range here, and we're not really bouncing here. You got to be careful going short here, but this, you can see this trend line still in play, and we may get another leg down like this one right here. And I already showed you, if you get a measured leg like this one, it was down here somewhere. And so you would expect prices to try to go lower. When they broke lower here, and then we couldn't go higher, and we start making all these lower highs right here, and that big bearish bar, and confirming this little trend line. I kind of like that one. It's real close. You could almost argue for that to be green, but it's a little two-legged correction. There's a new high here, so first entry, second entry. It's a failed second entry long. We made a lower high here, or lower low than this low. So we're pushing lower, and we can't get as high each time, and that's generally a signal, especially with this just being kind of a secondary pattern, maybe inside this bigger pattern, which is the two-tiered channel working lower. So if we push on through there, we're probably headed all the way down to here, and we're probably going to get a measured leg like this, and maybe one like the other one I showed you. And so I kind of like that one. It looks like it may be going to break higher and give you another chance to get in, but it doesn't. It does have that trend line, and that does turn down off of it. But you're going short right there, right into that double. It's a double bottom now, and look how it struggled. But notice how it's still closing below that trend line all the way. But I don't think you want to enter there. And where does it go? Right where you expect it to go, to the other side of the channel. It tries to bounce, but it's still, this trend line is a very strong trend line. Very key. It's definitely a key entry point. But after just coming off that low on a first entry, I'm not entering there. There is a little bit of a trap there, but now we've overshot, and there's too big a chance it bounces like right here and goes back up. It does end up going lower, but you just don't know that ahead of time, and it's just real risky. There is a high here and a first entry and a second entry, and it went higher and turned down, so there's probably going to be some traps, longs here, and that's probably why that shot on down one more time, because there was a bunch of longs that had to exit that were trying to get long right in here, and they probably trapped some more right here thinking they outsmarted everybody, and they just get trapped and outsmarted themselves, and then it bounces. And this actually took us into we were actually into the 2 o'clock hour here, but I thought that was interesting and worth talking about. So I wouldn't be against taking that trade right there if you recognize that trap. But I think it's a little risky that late in the day and being after 2 o'clock. But it's still an interesting setup. You would expect prices would have bounced here, but instead they trap some longs and it goes shorter. And you know, I get a lot of these lately. People send me emails and say, this looks like a perfect trade. I can't understand why it failed. And you know, they miss a lot of little small details, so you got to pay attention to all the details. Even though this worked to the downside, you know, I guess I'm really thinking more people trying to get long here. You start trying to pick bottoms and you're going to get burned like that sometimes, and that's just the way it goes, because basically you had a close here, a new low right there, and it bounces. And I can see somebody trying to get long there and then ask me why it failed. Well, just don't try picking bottoms. But there's always other reasons, and I used to think that sometimes trades just fail, and they do. But 99.9% of the time, you can study and figure out why it failed. I'm not as big a believer that trades just fail as much anymore, but I've gotten better at reading the chart over the years and understanding things. And generally 99.9% of the time, you can find a reason for why a trade failed if you study it hard enough. If you can't, send it to me and I'll tell you my point of view, and it may just be one I tell you, hey, I can see why you took it, and it just was a trap and it just failed or whatever. Because especially, I've told a bunch of you this lately by email, so I'll just say this in the video and I'm gonna wrap it up for the day. But the failed second entries, I get more times than not when people have a failure and they can't figure it out. They think they thought they outsmarted everybody. They thought, I found a perfect failed second entry and it failed. Why? I thought this was the perfect trade. Well, that's the whole idea behind most of these failures, is that they're traps, and sometimes they're a double trap. And so sometimes you're going to think you're finding a second entry and you're just getting fooled. Most of your failures are going to be counter trend. So in other words, if you're looking for failures on this trend up, they're going to be more to the downside, not to the upside. Here's the failure to the upside right here. But that's, most of the time you're going to look for them to the downside, and you're going to try to get back on with the trend. So if you're seeing a failed second entry long with the trend, it's not going to fool a lot of people, because some people will not counter trend. They've learned you can't counter trend trade and make money for the most part. So most people will not look at traps with the trend. The traps are going to be counter trend. So keep that in mind. And when you're coming down here, you're not going to be looking for traps to get long. You're going to be looking for traps to the short side or to the long side that allow you to get short. So I hope that's clear. And that's where, I really, there's a reason I don't teach failures a whole lot early on. And it's because if you're trying to learn price action and learn about second entries and staying with the trend, failed second entries will just trip you up. Wait till you get a great understanding of everything else, and then the failures will almost stick out like a sore thumb, like banging your thumb with a hammer. It'll be that obvious. And occasionally you might get fooled, but for the most part they'll be very obvious and it'll make much more sense. But if you're trying to learn it all at the same time and you're looking for all these failures, you're going to get when you start going sideways like this, you'll get chopped all to pieces for the most part, because it'll fail both directions multiple times. You'll get failed second entries, failed second entries. When you're going sideways, you want to just play it like a range and forget all the rest of it. And when you're trending up, you want to look for failures to the low side and try to get on with the trend. And when it's trending down, you want to look for failures to the high side and try to get short with the trend. So that's the basic gist of it. So I hope that's clear and helps some of you. But I really highly recommend that, even though I talk about a lot of failures, because I have to, because not everybody's at the same level and some people want to learn about them. But if you're new to this and you're just learning the basics and all that, forget about the failures. You'll be a whole lot better off, because they will come to you, and they are powerful trades. I will tell you that. They're very powerful setups. They can make you a lot of money, but I would describe them as a very experienced trade. You need to know price action. You need to be good at it. And if you're not and you're just learning, forget about them. Put them aside, and as you get better at this, they'll be almost obvious to you. So anyway, hope you had a good trading day. I'm going to wrap it up. That's enough for today. We'll be back again tomorrow. It's Mac with PriceActionTradingSystem.com, and we'll see you next time.